You know, I've never been a fan of VYM, the Vanguard High Dividend Yield ETF, and I feel a little bit guilty, right? I mean, this is a low cost index Vanguard ETF. It's supposed to be very high quality. Now, VYM is high quality, most people would call it that. But I guess what I'm trying to say is the competitiveness in terms of the performance simply isn't there, especially if the next couple of years are positive in the market. And to elaborate a little bit more, here's an article titled VYM, a great ETF for inflation, but not for a recovery. So VYM has outperformed the overall market by a healthy margin this year in 2022. I'll show you the performance in a second. Although a great core holding, its heavy value tilt may lead to muted returns as inflation recedes. So if we toss up the S&P 500 as the point of comparison, in the past, let's go year to date here. So VYM has definitively performed well in a down market. But if inflation recedes, and it seems like we are heading in that direction, and there's a strong couple of years ahead of us, in the same way that VYM didn't move much to the downside in a bear market, it's also not going to move much to the upside in a bull market. So of course, I don't know what's going to happen, but it is extremely plausible that next year, or say 2024, the inverse of the situation is true, and the S&P is up 17% and VYM is only up a couple of percent. And unfortunately, I always see people fall for this. They invest in what's currently performing the best, not what will perform better in potentially the next cycle. So 2 years ago, that was technology stocks. Everybody was buying those because they were going up and performing the best. And over the past year, value plays have been performing the best, and that's why now at the end of all this, people are piling money into this section. And again, if the worst of inflation is behind us, the need for something conservative and value focused is also largely behind us, and you're not going to be positioned well for the potential recovery. But there's another issue with VYM that I want to talk about, and that's the dividend growth rate. They currently have a dividend growth rate of just over 5%. And I mean, that's okay, it's not terrible, but when you compare it to schd, we are in the double digits here. And coming to etf.com, we can actually read the methodology of VYM to figure out why this might be the case. So VYM offers a diversified, conservative approach to high dividend yield in a low-cost wrapper. The fund's broad basket stems partially from its comparatively lax dividend screens. Firms are ranked by forecast dividends over the next 12 months. Those in the top half are selected. Stocks that make the cut are weighted by market cap rather than dividends. And that's basically it. There's no focus on cash flow, debt, or even dividend growth rates. And in stark contrast to that, when it comes to schd, here it says schd is a market cap weighted fund whose selection universe only includes firms with a 10-year history of paying dividends. Within that universe, schd uses fundamental screens, including cash flow to debt ratio, return on equity, dividend yield, and dividend growth rate to build its portfolio. So the whole reason schd has a much higher dividend growth rate than VYM, which is very important to a lot of income dividend investors, is because VYM just doesn't focus on it at all. And perhaps that's why the overall return of VYM isn't quite as good as the competition. So in terms of the total return, which is very important for these dividend income assets, since December 16th, 2016, the annual rate of return, including dividends, is just under 10%. If we want to compare that to schd, during the same time, this has an annual rate of return of over 13%. And even schd, which uses covered calls, it's actively managed, but they are similar to schd in terms of their methodology. They have an annual rate of return of over 12%. So to conclude, I love the idea of VYM. Passively managed, super cheap, but when it comes to the actual methodology and its performance, it really leaves a lot left to be desired. And when you consider the competition, I just think you have better alternatives, and that's why I've never invested in VYM. And if we come to my portfolio, I currently have both schd and divo that I personally invest in. But let me know your thoughts on VYM in the comments below. If you're still watching and enjoyed, leave a like, subscribe, and I'll see you guys in the next one.